If you'd like to see more of our videos, please subscribe to our channel on YouTube. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today's May 5th, 2020. And today is Tuesday morning, so looking at the major economic events of the day. First event coming out at 2:30 South African time. The Canadian dollar has a trade balance number coming out. And then at 4 o'clock South African time, out of the United States, ISM non-manufacturing PMI number coming out. Now, looking at the currencies, we are watching the rand actually gain versus the dollar, while the major pairs are pretty much unchanged. Looking at the Dow Jones, we bounced yesterday on the hopes of reopening. Okay, the markets are reopening, and the markets rallied late yesterday. Now, looking at the commodities, gold trades at par value at 1,700, while oil pushes above $20 a barrel. Lastly, looking at the stock, it was really Microsoft and Amazon that led the markets higher in late day trading yesterday. But let's take a look at the markets and see what we can expect from today's trading. So we're first taking a look at the Euro USD, and pretty much you could see it's been flatlining. Okay, we're about a 40 pip range yesterday. We were trading a 109.46-ish level, and we're right now 109.06. So about a 40 pips range, but really nothing to write home about, as this is really flatline. Now, earlier this morning, we had a number coming out for the Australian dollar. It was a rate decision, and you could see it's rallying a little bit here. It's just got to follow through. Nothing, again, to really write home about, as the markets are still digesting the reopening of the financial markets and the markets around the world. Now, looking at the rand versus the dollar, okay, we were trading yesterday at 1891, and now we're trading at 1841. So we're still within the balance, okay? We're still within the range, okay, where we've been trading earlier, okay, around this 19-ish level and this 18-ish level. We're smack in the middle of it, okay, just like gold is, okay? So interestingly enough, we're right there in the middle. So unless we break on the downside to this area, okay, I don't see it, I don't see any entry positions yet. Okay, but keep an eye on it, because it will unfold itself as the markets reopen. Now, speaking of the gold, let's jump to gold. You see that it's trading at par at 1,700. From our extremities, 1,730 and 1,672, it's smack in the middle. Okay, so nothing really to jump out and say, okay, it's a clear buy or a clear sell, but just keep it on the radar. Okay, all of them you got to keep on the radar, because as things unfold, we'll see some rotation in the markets. Now, looking at oil, this was the one yesterday, and earlier this morning, jumping above $20 a barrel. We're trading right now at $22 a barrel, and this goes to almost like a couple of weeks ago, where we, started our descent down to $7 a barrel. Now, it looks like it's pushing higher, but remember, it's got to stay above $20, and this is on the hopes that the economies are going to be opening. That means airlines are going to be back in business, and it's going to be shipping, and, all kinds of trucking businesses are going to be, and obviously consumer goods are going to be consumed, and motorists are going to be using oil. So things are unfolding, but it's too premature to say at which stage this coronavirus is going to head us next. Okay. So with that said, there's some optimism, but just be aware of it. Okay. Just be aware of the downside as well. Now, looking at the Dow Jones, we're trading right now at 23,826. Where yesterday we were trading in the 23,300-ish level, 200-ish level. Okay, we capitulated. We had a gap down yesterday. Okay, and then we capitulated down here at 23,200-ish level, and then we just took it off towards the end of the day, and the momentum is continuing. Now, I want to highlight a couple of things, and I'm going to clear out the graph here just for a second so you can see this a little bit clearer. If you look at this capitulation, we have very large volume, okay, which is really hard to discern which way this is going. But as the market goes higher, we actually see a decrease in volume. So it's still too premature to say, whether or not this is a fake out breakout, okay, and whether it's just hype, or whether it's just, a few traders pushing it higher, before the market actually opens. And remember, Friday we have NFP. So we could push the market higher all we want to, but, the report card, so to speak, is coming this Friday, okay? An NFP for April, okay? So it's going to be a very scary number, but the question is how scary is it, and what do we anticipate is going to happen for the month of May that we'll have the NFP in June. So that's going to really be the telltale sign to give us a direction for the markets moving forward. All right. Now, the real next resistance level is this 24,128. Yes, we do have a minor resistance level at 23,827, but not as major as 24,120. Okay. So just keep that in mind as we continue to trade this throughout the week. Now, remember, the Dow Jones reflects the old school kind of economy. Okay. The banks, the insurance companies, the automobile companies, the real, brick and mortar of an economy, not the high-tech side. So if we look at the NASDAQ, it's relatively still strong. And that's really because when we look at the tech stocks, they're still very, very strong. They have a lot of cash and they're able to do some very creative financing in order to, just capitalize at this moment, that we're at right now. For example, Apple is actually borrowing money, okay, even though it has some money in reserves. They're borrowing money at a really low rate in order to buy back their stocks, okay, in order to capitalize on the next upward momentum. So something to consider, when we look at some of the high-tech stocks, Microsoft, Apple, and Facebook had a great day yesterday. Looking at Facebook, we're trading at 204, and we're only down $20 from our all-time highs in February. So just remember that. And looking at Apple, 292. Okay, where are we off of our highs? Let's look at that. 320. Okay, so we're only about $20 to $30 there. Amazon, just a percentage there from our all-time highs as we made the all-time highs throughout this debacle. Okay, and looking at Microsoft, trading at 178. We're only about $15 to $14 off of our all-time highs of 192-ish level, 190-ish level. So again, the tech stocks are very strong, so there's a little bit of a shift in the market, and we got to keep a perspective of what's going to happen in the next 30 to 40 days. Okay, very, very important. Lastly, looking at JP Morgan, it's flat. Okay, so this is what I'm talking about. Parts of the markets are really getting clobbered, while some of the other markets are still very strong in the anticipation that they're going to be the ones that are just going to take us out of a possible recession, hopefully not a depression. Okay, so just keep that in mind. This is Fred Razak. I want to wish you guys a great trading day. Thank you.